right. Hello, everybody, and welcome, Daryl. Thanks, Mariko, for hopping on. I am Candy Martin. I am the founder of the AK Legacy Foundation, as you can see on the screen. This is our website. And what we do is we pay it forward through business education and financial literacy. So everything that we do generally centers around that. And it also means being an advocate in our community. So in order to do business education and to do financial literacy, we try to share information as we get it. We are experts in different areas depending on who our guest panelists are. And so today we have Mr. Darrell Woods, who is, from what I understand, knows his stuff about homeowners insurance. Now, I want to give this disclaimer in Darrell's defense. This is a general Q&A session. This is not the end all to be all or to hold him liable for any decisions that you make. So he is here just to answer some questions, just to kind of give us some general terms, some understanding. I almost want to call it like a translation session, like, hey, I read this and this is what it said. What does that mean? By no means should you make any life-changing decision in your finances without consulting with your financial advisor, your financial planner, your tax professional, your spouse, your pastor, whomever your answer to is. Always make sure that you take this information as that information and make your decision based upon what's best for you and your family. And so with that being said, we got the disclaimer out the way. I'm just going to hop right into it. I am in the great state of Louisiana. And I am very thankful that I had very minimum to complain about. I mean, like, being inconvenienced without power. I mean, I'm old school, so I was okay. Some of the younger people just not quite making out so fine. They got to have the internet and then the air. They probably could have done with the heat if they would have had the internet. So I want to say, let's get right into it. So Mr. Darrell, tell us a little bit about your background, just so that we know which way I can direct my questions to you.
Okay, so I am an associate with World Financial Group. That's how me and Mariko know each other. But I also do property and casualty. I am a licensed 220 property and casualty agent in the state of Florida. I have 3 years total in property and casualty. I once was initially a customer service representative for about a year. I have been a licensed agent for 2 years now. So.
All right, awesome. Thank you for taking time out on a Saturday. And as Mariko mentioned earlier, we do have some disaster recovery going on here in Louisiana. So some of us have lost track of time, days, and the season. This is supposed to be on fall weather, but I think we were like at 101 for the heat index, so it's a little warm. And we'd rather be in Florida with you guys on the beach. All right, so one of my first questions I got a lot of people calling me about or texting about was, hey, I got homeowners insurance. Why do I have to pay for the hotel? And so the limited knowledge that I have is what I share with Mariko. I'm thinking you just take the money out of your emergency fund that you should have, and you pay for your hotel and everything. You keep your receipts, and then you call your agent. So what would be the process, Darrell, in times like this?
Okay, so as long as I will say, as long as your homeowner's policy is still active, you can actually reach out to your insurance company prior. Depends on the company, though. Some companies will ask for you to actually make the payments to moving into a motel or hotel, and then provide them the receipts. But it's what is it? It is called, excuse me, it's slipping my mind at the moment. But
loss of use or something like that. I don't know.
Yes. Reimbursement. Yep. It's and what it is they actually will pay up to a certain amount depending on how much coverage you have, because there's an actual amount. It may be 30,000, 40,000, it may be 20,000. You can actually adjust it based on how much you want, depending on how much the maximum of your dwelling coverage is, because it's a percentage. So It just depends on how the company actual underwriting guidelines are. You can pay for it, or uh, you can pay for it and have them reimburse you, or you can file the claim and they will actually pay for it. But it's loss of use, meaning that
Right,
your home is unoperable to live in due to some type of significant event that is covered under underwriting guidelines.
right. So everyone should actually get the policy out. Well, this is what I told them. I said, get the policy out and see what it says. And then they start reading and they're like, what does this mean? So I was like, oh my gosh, I created a bigger monster. I told them to read it and now they don't understand it. So is there a general website or who could they talk to if they can't get in touch with their agent or don't even know who their agent is?
Well, okay. So when you initially get homeowners insurance, you should get a full copy of your policy. And your policy will explain everything all the way down, not the declaration page, because the declarations page is only a brief summary of the coverages you have, but the actual entire policy form itself, and that will actually explain in detail everything that is covered. It explains all the exclusions in the policy as well to say, if this happens, we will not cover you. But if this happens, this will give you coverage. So that's where the best thing would go, or best way to go, instead of actually speaking with your agent. Your agent may be able to give you information. I'm not telling you that your agent does not know the information, but your best bet is to actually review your policy, because all policies may be different depending on what the circumstances of the situation of the individual was at the time. So,
All right, all right, all right. So another question that I have for you is that some people assume that if they have renters insurance, that it does not, there's no provision for them as far as having to evacuate and to have hotel stays. And I know that's going to be case by case, but do some renters insurance offer reimbursement for hotels due to evacuating from a disaster?
yes, it does. It just depends on whether or not you actually opted to get that coverage, because you can choose to remove it on either the homeowners or renters policy. So it's not something you're required to have. If you choose to take it off, you choose to take it off. So it just depends on the person, and you have to look at the policy itself.
Wow. So that means some people may have an assumption that they have it, but this is not something that's automatic. Just because you have insurance that you pay, an active insurance policy, doesn't necessarily mean that you have reimbursement for hotel or for loss of food or things like that. So this is not something that's automatic.
Well, I'm gonna say it this way. So it does fall into the guidelines of something that is automatically on the policy, but you can opt to take it off, because it
Gotcha.
actually changes the price of premium for the term of the policy. So, but most people, I would honestly say, an agent, in my eyes, especially me as an agent, I would not recommend or suggest to anyone to remove that coverage. I would try to find other ways to change your premium versus saying remove a coverage just because you want to save some money. So,
Gotcha. Gotcha.
but the thing of it is that um, everyone may not have the same amount, because it does vary based off your dwelling coverage amount.
Right. And one other issue or one other challenge or something people are just now learning is that there's such thing called a deductible. So,
Yes.
for example, Sally, her claim was $1,000. Her deductible was $500. So she only got 500, and she's not understanding, hey, I had $1,000 worth of this, and that. And even in a disaster, you're going to subtract from my claim my deductible. So kind of explain to us how that works when a person has a deductible or a higher deductible. Some people, tell us how that works.
Okay. Well, so it just depends on whether or not the person actually wants to put the claim on their homeowner's insurance, because any claim that is filed on your homeowners, it stays with you. So, so say for instance, if you have something with the example you just gave, $1,000 damage, and your deductible is 500. Um, do you really want to take the time to actually file a claim and have that stick um, with you itself, or do you prefer to just say, you know what, I should just go and get figure out how to get this $1,000 and actually pay for the coverage? I mean, well, the damages myself, because that it really does affect you, because if you have so many claims in this 3 year time frame, and depending on what type of claim it is for, it does kind of affect your cover, affect you going forward into certain company. Because if you have too many claims, a company can deny you, and it may make you harder to get coverage. So,
Gotcha.
um,
Gotcha.
personally, if
Mhm.
it's $1,000, I would suggest or recommend rather actually go and spend $1,000 yourself without filing a claim. But if you really need to file the claim, then you need to file the claim. But the way it would work would be you would have to meet that $500 deductible before the insurance company would choose or actually decide to move forward with making any type of payment on your property. So if you don't meet that 500, they're just going to be, well, I can't help you. I can't help you. Or they're going to tell you ways to maybe possibly borrow money from family or get a loan or something of that nature. They will not touch you until you actually have that deductible met.
All right. So a little sidebar. Don't go anywhere down. I'm gonna put Mariko on the spot. So one of the things he mentioned just now, he talked about borrowing money or doing what you got to do. So kind of in this situation, tell us a little bit about an emergency fund, how to go about, and why we should have one. How does this all tie into what we're going through right now?
So I remember when I went through a financial crisis myself, when we went through the recession, and I only had 3 months saved. That event caused me to be more proactive with my savings. So if you're in a situation and you haven't saved money, or you're in a situation where you haven't saved enough money at this period of time, one of the things I would do is just use this as a learning lesson. Because the last thing you want to do is not have an emergency account and then have to use more credit cards to get into a hotel or food or gas or whatever the case may be just to get by. Now you come out of that situation and now you got to pay those things back. So just use this as a learning lesson. There are some things that you can do, just to position yourself. Now, you should have a checking account, you should have a savings account, but also you should have some type of emergency account. The general rule of thumb is having 3 to 6 months set aside as an emergency. When that experience I went through in 2008, when we had the recession, and I had 3 months saved, and I recognized how quick that money went down. I learned from that and said, you know what, Mariko, don't let this experience happen no more. Don't put your family in this situation no more. And I focused on cutting things, not going out of town, not eating out. I saved 2 years of savings so I didn't have the experience. It didn't happen anymore, but I just wanted to be in a position if I had a life event that was significant, I didn't have to use debt, or I didn't have to put my family in a situation where, I couldn't afford something and I needed to get out of town or something like that. So definitely having some type of emergency account and put it. And one of the things I did, Candy, is I made it hard for me to get to it. I didn't have a debit card to that savings account. I had to, go to that location. I had to go to the location and get the money out. So I could transfer into it, but I couldn't go out and get money out of it. I had to go to that location and do it. So if it's easy to get access to it, a lot of time we would use it. But I kind of made it hard for me to get it because I was trying to save, to position myself not to have that experience anymore.
All right, cool. And one other quick question before we bring Darryl back on. Yesterday, yeah, because today's Saturday. So yesterday we had Financial Friday, the AK Legacy Foundation. We have an organization called Women in Business, and in that program we teach about how to save money, how to budget, what type of insurance. We get into all of that. And one of the questions was, well, one of the challenges, one of the ladies said, she said, I want to save. She said, I just don't have enough money to start saving. So in her mind, I'm thinking she's thinking she needed like $500 or $1,000 to start a saving. What would be your advice to her, someone in her position?
Now, when I hear the answer of I don't have the money, it makes me think about when I was going through my financial challenge, and I had lost my job and I was working $8 an hour. I remember this in 2009. And I said to myself, I can start somewhere. So what I did was I went to the bank when I got paid, working $8 an hour, and I would get a quarter full of $25 a quarter. And I put them in a piggy bank just so I can develop the habit.
Yep.
The habit is everything. Belief in I can save something. The habit in starting now doing something. See, we have accounts that we can set up for people, and all you need is $10 a month, and they can start saving in emergency. I know $10 would take slow to grow, but I'm not interested in the slow growth right now. What I'm interested in, the habit of growing an account where as you get more money and God will bless you with more money, you will have the habit to increase it. So that's what I'm mostly concerned about. We have accounts where people can start $10 a month saving for an emergency.
That's awesome. And that is some good advice, because that behavior pattern, it just kind of starts building momentum. And the next thing you know, it has snowballed into at least 3 to 6 months or potentially a year or two of savings in case life happens. Not if it's going to happen, but when it happens. Right. So, Darryl, give us one of your insurance tips. I know it's probably 1,000 things you can think of, but going forward, the damage is done, the disaster has came through, we're dealing with the aftermath. Some people who don't have insurance at all are now, they're listening. So what advice you would give them when it comes to selecting, if they're homeowners or if they're renting, what type of insurance advice would you give them as far as getting a policy selected?
Well, one of the things I would say, honestly, it really just falls on a lot of the features of your home, because the age of your home is something that you have to take in consideration. The structure of the home is considered as well, because some companies may not touch homes that are older than, for instance, one of the companies I work with, they won't touch homes in the Panhandle area, which is Tallahassee or so, for Florida, 2006, and anything 2006 and above, we're good, right? Anything older than 2006, can't even touch it. So you just got to take time to actually research what the company may actually provide, or talk to an agent like myself that is independent and is not completely captive to one company, that will actually be able to sit down and talk to you about different options, so you don't have to do all the researching for yourself. So that would be something, honestly, I would say, talk to someone that is an independent agent versus a captive agent.
Okay, so, and I'm going to ask you this, I'm going to put you on the spot. Are you a fan or not a fan of the 1-800 numbers or the Google search when it comes to selecting insurance for your home or if you're renting?
Well, it just depends on how you want to look at it. If you want to truly build a relationship with someone that actually cares about you, or do you really just want to be able to say, hey, I paid and I got coverage? So that's really the thought process, because you call the 1-800 numbers or this or that, they're just going to give you what you ask for versus actually trying to understand what you truly need. If you ask, I'm going to give it to you and say, hey, guess what? Bye. Thank you. I made a paycheck today, or made some sales or something. But it's not very beneficial to you, because you can actually talk to an agent and we can actually understand and figure out what you truly need in certain situations. So just depends on the person.
All right, so so I'm gonna ask you a couple more questions, but really quick, kind of sidebar. I want to make sure that everyone out there, I thought about it when you were talking, when I thought about the 1-800 numbers or going online. When it comes to FEMA assistance or government things during the time of disaster, do not pay. I want to make sure that you all are not being scammed. I've already had one person already to contact me after she had paid someone, I want to say, I don't remember if she said $250 or if she said $500. Well, it was that amount that she had paid for someone to complete her FEMA application. So if you're just tuning in, I want to make sure you all know that those services are free. You do not have to pay FEMA, and you do not have to pay someone to complete your FEMA application. There's a 1-800 number, there's website assistance, there's chat, that FEMA will actually walk you through the process. You do not have to pay for that. And the AK Legacy Foundation, our website is aklegacyfoundation.org. And our number to our office is 985-445-9582. We will even help you complete the application at no cost. We thrive on financial literacy and building up our community. So I just want to make sure during this time, reach out to your elderly in your community, or if you have young adults in your household or anyone that you know may not know that they don't have to pay for it, reach out to them and let them know FEMA does not charge to complete the application. So if you need assistance, get the assistance you need without being taken advantage of. So, and it's sad to say that we even have to have this, have to put that out there during this time. People are getting scammed already. Somebody has already pounced in on that. One last question for you, Mr. Dower, before we exit. I don't want to hold everybody too long. We kind of, is it a long week? For us, one piece of advice that one thing that I would like to ask you is when it comes to homeowners insurance or renters. When I say homeowners, even if you're renting, what would be if your dream ideal policy, let's say just for a average family, husband, wife, 2 kids and a dog, they've been in their house a couple of years, just a basic American family, what would be the most reasonable type of coverage that they would need to have? Because sometimes we overpay for stuff, and it's just because we're just trying to sign up. What would be and this is an estimate, but like he said, you need to sit down and talk to somebody and get it case by case, but we do want to give him an opportunity to just offer us, something to consider.
Well, I'm just trying to make sure I understand this correctly. You trying to understand what would be an average price range that would be paid?
Well, not necessarily price range, but more so as coverage type. If I have a home and I have 2 cars, and a husband and wife and 2 kids, do I need what type of coverage? Do I need flood? Do I need fire? Do I need, what type of coverage do I need to have on my home? Not necessarily price, but what type?
Got you. No, okay. So, well, the your home insurance policy or renters, because I'm gonna say this, renters, it is very similar with condos. So for those of y'all that are in condos, it does not cover renters, meaning renters and condo insurance does not cover the structure itself, because renters is not your home. So that's why the structure itself is not being covered. The actual owner, meaning the homeowner that you're renting from, they should have a home policy, a homeowner's policy themselves, to actually cover the structure of the home. So that is not something. And the condo association actually has a policy which is called a master condo association policy, and it actually covers the structure of the condo. Renters and condo only covers the contents, meaning your personal property inside the home. But when it comes down to homeowners itself, the basic stuff is just the dwelling, other structures, you got the personal liability, you have loss of use and medical payments. Then you have other things such as fire, depends on the area. If you're in California, now do take in mind, I'm only licensed in the state of Florida. I'm gonna say that first, but please do talk to someone that is licensed in your state because laws do vary, things do change. Because some coverages, you have earthquake coverages for things in California of that nature, and there's other coverages. But point of it is, I'm just going off basically what I can give you from Florida. But so you have law and ordinance. There's 25 percentage of that. Certain things are still built into the policy that are just automatically given. It's really not a real big deal to be concerned. You know, should I take this off, or should I worry about this, or should I have this? Certain things does not actually change the price or the premium of the policy until you start getting into the dwelling or other structures or the actual because matter of fact, there's actually a part in the policy, something that you should take in consideration would be water and sewage backup. All policies are not built with that. Ask your agent specifically for that. And the reason why is because that has to do with the actual home inside, meaning your pipes burst or your water heater or something of that nature. That is where the concerning of water and sewage backup is concerned. Your toilet or something like that overflowed. Now you have a concern. Flood will not cover that. The reason why flood will not cover that is because the fact that a flood is something as of a outside source of water, meaning you had a hurricane, tornado, a actual tsunami or typhoon or something of that nature that actually caused outside sources of water to come into the home. But anyhow, to get back on to where I'm going at with it is because if your pipes burst and you do not have water or sewage backup, you're kind of on your own because it's really just like, well, I'm sorry that you had some damage, but yeah, your policy does not cover that, and you're gonna have to figure out how to pay for it. So do ask about that.
Yeah, that was actually going to be one of the questions I had meant to ask you. I know, like you just said, flood is from the water coming from outside, but then there were some people that, well, you know, I suffered damage because the wind blew the roof, and so then it rained. So is that not considered flood? And so it was like, well, I don't think so. And I was like, well, look, I'm not an insurance agent. Let's ask somebody.
Well, okay, so now with you saying that one, if you were in the instance, especially with what's going on in Louisiana, that is to an extent covered because the fact that your home was affected by a hurricane. So that is where the wind and hail portion and your homeowner's insurance comes in because you actually have two deductibles. If you pay attention to your policy, you should have one which stands for it's all other perils, meaning everything else that caused something like a fire, electrical damage, meaning say you had a shortage in a wire, something sparked, didn't set a fire, or law and ordinance. That's why that's in there as well, meaning the you had some type of riot or something going on outside which caused the problem. But do read into your policy because some things are not covered. Terrorist attacks, they're not covered. But so to get back into where we were at with that, so if your roof blows off due to a hurricane or some type of actual natural disaster that is actually affecting multiple people in the area, you should be pretty good. That's why they have the wind portion on there. That is where it says either a wind deductible or a hurricane deductible. It depends on the wording of the particular company, but you should be covered. And if it's damage to your home because the roof flew off and then the rain came in, you should be covered because the fact that the wind is the overall cause to why you have that type of damage.
So it sounds like, Dow, if I heard you correctly, we all need to pull out our policies and we need to get to reading. You
Pretty
know,
much.
we need to get the reading. I don't care what state you live in. And I don't know, and all, I'm 25, so we're gonna go with that. But you be quiet. So, I don't think I've ever seen flooding in New York like I see now, like when I watched it. I don't think I've ever seen that. I'm sure it has happened before. And in my mind, that just was weird, that happened. And some of the other things that they're having going on across the US. So I'm telling any and everybody that's watching this video live or watching a replay, pull out your policy, read it, whether it's your life insurance, your homeowner's insurance, your car insurance, whatever type of insurance that you're paying for. We're complaining about paying for it, but we don't even know what's in it. Pull it out. Take some time, read over it, get with your agent, have them to explain it to you, to translate it to you. And then you have to decide if you have coverages you don't need, or if you have something you need that's missing, you need to go ahead and add it. And I know for some of us, this information seems like it's a little too late, a day short, how they say, a dollar short, day late, whatever. Well, it's never too late to start over and to get it going. And we want to cover everything. Like I said, the AK Legacy Foundation, we're about the entire person. Even though we mainly focus on business, we're not even going to get into business insurance and all of that. But the business owner is a personal person. So we want to make sure that you all are being protected, whether it's in your personal or in your business. And so that's why we have these talks. And I want to thank Mr. Dowell. I want to give Mariko an opportunity to give us some financial, close us out with some financial advice. Whatever direction you choose to go in with. Right now, we're kind of speaking to people about preparing for disasters. Or how to recover from a disaster. Like now, some people, we're already dealing with COVID and the pandemic. Let's not forget that. I mean, that's still there. And so you got people that have lost their job, just started to go back to work. Now they're dealing with a disaster. They just can't seem to catch a break. And now we're talking about saving money. Where we're gonna put this in this equation? And now they're evacuated from their home. They're in a hotel, borrowing money from Uncle Joe already. I mean, it's just, this thing is spiraling. And so what kind of advice do you have for the bounce back?
For me, it's just communication. Number one is thinking about all the different services you're having right now that you're paying for, reaching out to them and communicating your situation. A lot of time they may allow you a grace period to pause, to catch up on some savings, to reactivate those services, to be able to start paying again. So it's just a matter of communicating to those companies that it could be credit card, it could be, any type of service. If you're not utilizing, streaming service right now, some things may be able to be cut, in there. But at the same time, in your budget, you gotta also think about, okay, how can I anticipate? Anticipating and saying, okay, if this happened once, it can also happen again. So what are some things that you can do to cut, meaning that you can look at your, things around, could be taxes with Candy and figuring out some deduction that you can do. It could be looking at your W-4 and are you doing a proper, allowance number, making sure more money come into your household, looking at, different type of services you're paying for. Do you really need, to be paying for that? It could be even eating out or clothes that you buy. Do I really need to be doing this on a weekly or monthly basis? Just to anticipate, okay, let me rebuild my savings. Do I need to stop paying for this right now so I can do that? Also, what I would do at the same time is look at ways that you can earn additional income. There are ways you can look at something part-time as a job, and that can bring in additional income to catch back up. But also there are ways where you can do something 1099 in a business, like a 5 to 8 hustle, where you can do something outside of your job to earn additional income that will also bring some deductions with it. So it's all about, okay, communication. It's all about how can I rebuild my savings. It's all about, that the anticipation process and also how I can generate more income in this time? What services out there that can give me money if there's a natural disaster? So using every source of help out there that I can. But that's what I would say, Candy, about, what I would do in that situation moving forward.
All right. Well, you all, I thank you, Mariko. I thank you, Dal, for hopping on. And just so that you all know, the Women in Business program through the AK Legacy Foundation, we're starting our virtual master classes. We were scheduled to start September 1, but we all know what happened. So we're going to keep it moving. On next week, Mariko is going to sit down with us and we're going to pick his brains and get some more ideas about financial planning. He's going to talk to us, and we have several more speakers. So all next week, in the next 2 weeks, we'll have speakers coming on. So you all make sure that you subscribe to our YouTube channel at aklegacyfoundation.org. Go to our website and you can find our YouTube link so that you can subscribe. Don't just go on there and watch the video. Leave us a comment, say hey, something, help us out with the algorithms, So we, like I tell people, even if you can't give a donation, you can do something, and that's called share and like and subscribe. That is free for you to do, but that does help us tremendously because we want to be able to do many things across the spectrum. And right now we're taking donations because we are providing meals. We're partnering with another program. We're not cooking. We're partnering with a program that's doing the cooking and doing all that. So that's what we're working on for right now. Just a little FYI, we're about 120 days until 2022. So it's time to we're in the last quarter. So finish this year strong. If you do nothing else, but at least start saving. I'm talking about if you just put $5, if you do $3, a roll of quarters, do something. It's all about the habit, not necessarily the amount. Have a sit down with an insurance agent, find out what your options are. If you do not have an insurance policy, and if you have one, sit down with your agent to review it. And so I hope this has been helpful. I'm Candy Martin with the AK Legacy Foundation, where we come together to discuss business education and financial literacy. And I appreciate you all once again, Mariko and Darryl, for hopping on with us. All right. And I pray that you all have a great rest of your day. Thank you. Okay, thank you.